Hey there, guys. This is Christian from Hertz Tribeca Trade Group with your end of day recap for Thursday, and a big event day. I have CNBC on, and it's like politics. They only want to talk about politics. They don't really want to talk about stocks anymore, which I find ironic because this is supposed to be a stock show. But nevertheless, you got to get through the noise. All of this stuff that's happened today on Thursday, in my opinion, is noise. Unless there's something that's really going to happen or take place, it's a momentary like pause in the action. Do people react to it? Sure, absolutely. I think, as I mentioned yesterday, I think there was a decent amount of mutual fund equity sales that went through last week. Just the retail crowd doesn't like to deal with this stuff, and there's always a knee-jerk reaction. What did we see the last week? A kind of a move into a little bit of defensives. As well as the VIX going up. That's just traditionally how these events that everybody anticipates, how it works. Usually vol runs up into an event that people get a little bit scared about, and people run into utilities, people run into bonds, people run into gold. So what happened today? It's even before there was really any news out, it was kind of a sell the news event. Once it was kind of coming out that really nothing new was coming out, this stuff is going to stay in the news, so don't get me wrong, but there's no new revelations. And what did we see? We saw all of those defensive areas sell off. Gold was down 60 basis points. Bonds were down 25 basis points. The gold miners, which were bid up pretty decently a couple days ago, now down 1.8%. The utilities also down 80 basis points. XLP, which we've seen just a huge amount of inflows into the last couple of weeks. Sorry, that's not the last couple of weeks. The last week, you could see that this. So how I use somebody asked me the other day. They're like, how do you use these fund flows that you look at every day? And it's twofold. It's either hey, I'm looking for a new idea or a new trend where people are putting in money in. That worked really well in robotics, which we've talked about nonstop. Look at all the money that's gone into robotics over the last since the beginning of the year, right? This helped me identify this. I got into robotic stocks early. I got into this particular ETF, so that's great for spotting trends. Same thing with the European inflows that have been. Oops, that's the wrong. Oh no, I just messed this up. That is, I'm going to lose my settings here. Uh, um, so that is, all the money going into there is one thing, but when you see so much money just rushing in short term into consumer staples, that tells me there's a little bit of fear in the market. It doesn't necessarily mean that the market is going to go down. It just means, I'm working from my notes here a little bit, but I think it was $800 million that went into consumer staples, through this run up. And it's just, this volume that happened here is, just people anticipating an event and getting a little bit of getting a little squeamish. Okay, so that's the bad areas. What happened as far as the good areas? I hate to use this term, so I'm not even sure why I'm going there. But in the beginning, right after the election, so I'm not going to use it. But in the beginning, right, the first couple of weeks after the election, what did we see? We saw financials get bid up. We saw the steel names get bid up. The material names get bid up, industrials, defense names. So today kind of felt a little bit like that. This is the second day of financials rallying. Kind of interesting to look at here. I've said that I really don't like the financials while they're kind of caught in between the two moving averages. The 50, the 100, and the 200-day moving average. Price action's been caught here. It looks like it might be resolving itself to the upside. They didn't exactly close on their highs. KRE, the banking ETF, looks a little bit more didn't actually get up there yet, but there was definitely some bright spots in the space. Citigroup made a 52-week high. We traded Goldman Sachs today as a day trade. Hell of a trade today. I put on calls for $1.50. I took them off for $2.70 today. That was one of the things that I was looking at pre-market, saying, hey, these financials could go for a second day. Plus, we had all that nice support that was setting up really nice for a day trade off of the 200-day moving average here in Goldman Sachs. So really a big winner in the room. I have to talk about the BABA trade that we put on, basically on the second of the month. Just a huge home run. I didn't know that they were going to report the sales that they were going to do, but sometimes if you position yourself correctly, This was a trade that we put on the BABA trade. I think here I've got my position. Do I have my positions open? I don't have my position sheet open, but let's see. Yeah, I think we put that trade on for. I still have part of it on, so let me just open up my positions. We put this trade on for like uh, 260, somewhere around there. The July 125, 135 call spread, and it's marking now at $8. So, just a huge winner. I managed to take off the majority of my KWeb ETF, which was just, me looking at what was going on here. So I managed to take a decent portion of it off on the highs of the day. So just an absolute, another huge winner. Where's my? I was able to get the KWeb ETF off for I paid 98 cents. Just literally, this is average cost base. I bought here and I bought here in an uptrend, buying a dip on an uptrend for 98 cents. August calls in KWeb and got out of them. The highest I got out of them today, I think, was $1.70. So. We've just been crushing it. SGMS, another target in this one, another target in NLCH. Uh, NLCH, NCLH. There we go. Norwegian Cruise Line. Really nice move up in this one. So this was the second target I believe we hit in this one. A couple other trades that we've had on micro semi. I mean, launching up 4%. So just some phenomenal trades that we've had on. A couple new trades today. CC. Being that we're starting to see the metals and mining start to perk up again, CC's been a name that, again, in a nice uptrend, but similar to this, right? Look at the move down here, a nice bounce, move up, comes into this 20 period moving average. I don't know if it's going to hold, but I'm willing to give it a shot here. Where do I think it will fail? If it can't hold this purple line in here, which is that's the 50-day moving average. If it can't hold the 50-day moving average, I'll get out of it real quick. But hey, it's worked before every time this has come into the 50-day moving average. And then also SGEN was another new trade that we added today. So that's it for today's recap. I have to jump into a meeting. So thanks for watching today's recap. The last thing I will say is the semis are now up 23%. The whole ETF is up 23% year to date. Again, I'm as I mentioned in last night's video, how I originally had about 5 or 6 semi positions on, whittling them down to about 2 or 3. I think this group is it's great to see it hit this 52-week high, and it's been up almost every day for like the last couple weeks. But look at this thing; it is now way overbought. In RSI, I have 78. You could also look at the SOX ETF, which is a little bit more diverse. But these things are really, really cooking here. I think a great place to take profits. I'm still long a couple semi names that are not overbought like this that I just mentioned. MSCC is one of them. So, a couple names are not overbought that I'll stick with, but I think the overall group is pretty hot. So that's it for me today. Have a great night, and I'll see you back Friday morning. Thank you.